traders, I am wanting to kind of go over some macro to micro focused analysis, as I have just revisited launching some Trader Insight YouTube videos for a look at how I size up a trade analytically from a technical perspective. In other words, I think that all trades really matter as it relates to low risk entry with defined risk, stop loss, and profit target, and then how to stay in a trade depending on the time frame, chase, swing, and trend time frame, all of which I go over in my live trading room every day and populate in my Slack client workspace. They're the basis of my trade alerts, etc. But I wanted to kind of focus in on how the backdrop of macro really informs my micro. I know I've talked about this before in other presentations, but I want to specifically drill down to the recent events that we've had with a surge in the dollar and a total crash in gold and precious metals and a hard rollover of the cyclical value trade into momentum of late, and how I spied all of that using intermarket analysis. So hopefully this will help a little bit, just kind of show you how I think and how I size it up and deliver it to clients. First and foremost, become one. This is my my thing. I'm very, very good in volatility and sector rotation. I offer lots of different ways to get that expertise. I run a live trading room. I have a lot of macro and micro analysis, and then recently just launched risk indicators, which are standalone trading signals. In other words, I use my proprietary pattern recognition and algorithmic type of indicators to alert clients separate from my trading room. Totally independent trading tools, indicators that will alert when a direction of the trade has changed and when volatility is entering. So I definitely recommend checking out these indicators. They're housed on VigTech.io. They are also very, very important for the active trader. They're going to be on the Apple Store also in a few days. And then a Discord server is more for the new and young and chase-driven momentum traders. So I've got hopefully something for everybody. The fishing club that I do is, as you know, kind of more analytical and very focused on being patient with trades and setups and understanding why they move. Risk indicators are alerts to trigger a direction in change, market change, and ETFs, 300 ETFs, over 5,000 stocks. And then my Discord server is a community, is run and managed by women. So we're very focused on excitement of the community, sharing, and also risk management. So without further ado, how did I get into this kind of macro-driven approach? All right, let's take a look first and foremost at a backdrop for the dollar. I believe very firmly that the dollar makes the weather and the rate of change determines the velocity. So dollar matters as it relates to the market volatility that can precede the FX or the currency volatility. It seeps into equity market. So I have a keen awareness, if you will, of how the dollar trades and how long it takes to base before it moves violently. And it did just that this week post FOMC. But prior to that, in my client workspace on Slack on Monday, and these were actually taken from the Friday close because they are actually, I've got weekly and daily that I update. This was the euro. So the euro looked like it was about ready to form a head and shoulder and roll over, and the dollar inversely was absolutely intonating an inverse head and shoulder to move higher. So the Fed was the trigger to actually launch this puppy. And once we had the volatility in FX land, it definitely rolled into the equities market on cue. So this was definitely set up as a rotation when it comes to the dollar and the euro, and of course the Chinese yuan and the yen. But take a look, this is UUP just for charting purposes and for retail It's not my favorite ETF to trade, but I will tell you it charts beautifully. So this was a double bottom, okay? This is an inverse head and shoulder that I just showed you a little bit more cleaner on my intermarket analysis. But the point was we were definitely oversold and it looked like we were ready to push higher. So I was bullish coming into this week. Then, of course, this is what happened. First of all, this was Monday, and I posted, I'm bullish. This is doing a really nice job of getting back inside. We need to close above the 10-week. I'm a big believer in the 10-week. By the way, this is a week, this is a day, this is an hourly time frame. So it was already basing in my intermarket. Stochastics were crossing over. It looked like it wanted to push through. This was Monday. I alerted that we would have a likely pullback in the euro and a bounce higher, a push higher in the dollar. Boy, did we, and I don't think it's done. By the way, I think it's going to come up here before we get a little pause and see what it's made of. This is actually the euro. It collapsed. So you can also kind of see this trend line action here. This is the left shoulder, that's the head, that's the right shoulder. Now, granted, head and shoulder formations can be bullish or bearish, but first they come and test the neckline, and that's what I said in my analysis to clients on Monday. Let's go down here and then see what happens. Wouldn't surprise me either way. We actually curve here and then head higher, in which the dollar would fall, it would get rejected, or we're going to break this neckline and oh my, dollar's going to take off like hot fire flames, even more so than it already did. So the euro dollar carry trade was a fabulous short. The dollar higher was a fabulous long. And with that, you got to also take a look at the TLT, which I have, big picture, I'm a bond bear. But I have always flexibility in mind, which means from this time that I recommended back in August 7th, all the way 20% down, with gold I might add, this formed a reversal into the 10-week, that's this line right here, at the same time as the 200-week, which is the orange moving average, got firmly rejected and rolled over. This is monthly, also said, but you know what? That's a higher low on a weekly. It looks firm. And then once it closed above the 10-week, this was very bullish. So it stayed and moved higher above all the moving averages until basically this double bottom formed, which was very bullish, right into another monthly figure. Okay, that's macro. For TLT, double bottom, we'll see what happens next because we're right up against some pretty firm resistance levels. We can see what happens with the dollar, which I think actually has a little bit more to go. And then, of course, we've got the euro, which I think has a little bit more to go on the downside. That was a fabulous pair trade, if you will, of macro, euro, dollar, and yields, even before the Fed came out with its hawkish bent that they're going to pull forward potential rate hikes, which is basically telling the market they're going to go on a diet in 2 years. That's not so exciting. They're still doing asset purchases. Their overnight, repo was record-setting, but you definitely have honestly, a more dovish look in regards to the 10-year, which is bullish, the bonds, and that whole, move had already been telegraphed pretty much by the market in the sector rotation trade that was momentum over value. So I'm a really big believer in sector rotation. I'm huge into sector rotation because I like to basket trade. And I'm going to put energy aside for another video because I definitely had cautioned exactly this particular, pullback and in energy on Thursday morning, which did manifest itself, but I'm still a big bull, the energy commodity sector. But as far as a sharp pullback in energy, that also rolled over. But before that, we had this beautiful, and I even tweeted about this, gold, copper, corn, soybeans, lumber. This is phenomenal drawdowns of late, right? But what was the most defining moment was May 10th when China came out and said they were going to basically put a stop to this commodity speculation, and man did they. I mean, literally on that day. It also happened to coincide with a day that Yellen came out and said, yeah, she can see higher interest rates. It's good for the market. Okay, that's reverse psychology, because on that point, rates started to fall, which is kind of interesting. So Yellen comes out on the 10th and says, yeah, rates are going to go higher. And China comes out and says, yeah, we're tired of speculation in commodities. And boom, commodities absolutely turned. Not ignore gold for a minute, but copper, corn, soybeans, and lumber. I can show you these just kind of in the retail world. You got literally copper turned, corn turned, the amazing, did I just say copper and corn and wheat? Okay, the point is, we had a phenomenal May 10th, everything across the board in commodity land, in what is not the perfect lumber futures are, but look at the May 10th. Everything that was a reflation trade, solid, big moves, lumber, soybeans, corn, copper, and the rest, turned on May 10th. Now, what was really important to me was how momentum was trading on the very next day. And I kept seeing a lot of reversal candles in the momentum world on that fateful May 11th. And I wanted to kind of, track this, because these are ginormous bars. And I mean, across the board, it was just impressive how many reversal candles we had, which basically meant they were now going to absorb the sellers and say, okay, we're going to stabilize. And then once they actually took that high out, it was beautiful rotation. So value rolled over on that macro-driven news of China putting a stay of execution on that commodity run. And then let's see what happens to momentum. And I was tracking this stuff very closely in my live trading room, and it was very clear that momentum stopped going down on May 11th across the board, and value stopped going up. Commodities stopped going up on May 10th. To show you that May 11th, how powerful it was, here's ZS on May 11th. Phenomenal. It just shows the power of that rotation. Same thing with Facebook. Absolutely gorgeous. Recommended Facebook as well. Again, once it gets above this level. Same thing with Amazon. It took a little while, right? This absorbed the sellers. It stabilized, and then it moved higher, a little shallow pullback at 200, and it wasn't really until this trigger on the 8th, and specifically opening up very bullish on the 9th, that I actually recommended this. But the point is, momentum stopped going down on May 11th, and the whole value, theme of cyclicals and the rest stopped going up on May 10th. All right, so now let's move to this little deal of, we went over MDB was gorgeous, Zoom, ZS. I mean, there were so many plays that were recommended in my live trading room that were phenomenal chases and swings. But let's go back to what happened to gold and what's going to happen next with metals and mining, because they really outperformed to the downside. This was this is metals and mining. I had actually recommended. Okay, so here's when I started to get much more interested. When I saw that we had a potential for a dollar reversal. I posted this to clients on the 18th, which is basically putting a little pause in the commodity run without really having confirmation that May 10th was the high in that commodity cyclical value type of rotation. This was proving to me that we really needed to take care of the dollar, okay? So I sent this to clients. I follow up, by the way, with a lot of macro as it relates to the gold trade as well, and Bitcoin and the whole thing. I was basically expecting that the dollar would start to bounce and that gold would start to roll over, and pretty firmly, and I got all kinds of support that I do. I talk about yields. We had some selling under the surface that hadn't manifested itself yet in price action, but I was extremely hesitant to really get bullish. The momentum or the cyclical trade until I had confirmation. And for me, confirmation came in the form of this particular commodity chart on the 30th. So I said, this has been a phenomenal run. Okay, I'm still bullish big picture with, small caps and value and cyclicals and commodities and energy outperforming stocks. In other words, things over paper. But I fully expect a pullback, and that was on May 30th. Again, the commodity trade had topped on May 10th, and I had called the lumber top perfectly. So I was very, very in tune with lumber very closely. I was still bullish the energy sector, but this whole CRB on a monthly showed me that we would most likely have a bounce in the dollar, which is the light gray here below it, underneath it, and a pullback in the commodity trade. That was my base case. Very much happened. Now let's go back and kind of look a little bit. We had also some momentum showing strength, which is underneath, okay? This is NASDAQ McClellan summation. Right here was a Morningstar reversal, and that was on also May 30th, which showed me that commodities were hitting monthly trendline resistance. At the same time, a massive sell-off in speculative assets from Bitcoin to SPACs to EV to high growth momentum plays were now basing and looking like they were going to form a reversal. And that's also which gave me confidence to recommend a lot of these momentum plays. That was a very, very important kind of transition. And we also had NYSE, which was just rolling over. NYSE is about 2,000 of your small caps, right? And that means I was getting a little nervous that small caps were going to start to potentially top out and roll over. So that actually worked. NYSE rolled over. Small caps were getting, digestion. My XHB call, again, 6-7, that we were going to pull down, taking a rest with lumber. And here was my lumber chart. That was also coming into play, $1,000 price target. So this is all that kind of macro to micro that I do, very different than the other technical analysis and detailed, trade setups that I do for the micro stuff. I also started to get worried on XLE as it approached the 56, 57 level and said, hey, careful. We're going to get into an area where I think we need to either jump the shark or we're going to have a pullback down to like 52 on XLE. So I give all these levels, the bearish divergence forming under the surface with small caps and the bullish divergence forming under the surface. Here's that same NASI chart, right? Now you can already see momentum has taken off. Beautiful. All right, so that's the macro and the intermarket that I use, and my warning on the euro rolling over. I keep updating clients. Check that gorgeous chart out from 1750 to 1200 and then again to 1000 with an overshoot to 850. By the way, that has been playing out gorgeous, just gorgeous. The flattening of the yield curve, my big picture bond reading, and then gold. So gold, I was bearish. So we overshot, came back down to this trend line, and I firmly believe that we were going to go back down to 165. So my recommended macro, well before the Fed came in on Wednesday and did their little hawkish read, which basically caused inflation to fall, expectations to fall faster than the nominal yields had risen, flattening the yield curve and causing gold to roll over, one of the reasons. It was basically that play down to 165 for gold and GDX and silver and the rest that also supported my higher dollar thesis. So we had the dollar moving higher, we had gold moving lower with GDX and SLV. I gave all those levels in my Slack workspace. And then of course, that rolled over into energy, which had been the strongest performing. So XLE was absolutely at an area where I said, hey, careful. We still have divergence under the surface with SPX. We definitely have some gaps between the dollar and the market. We have risk coming in. And this was my bullish percent index for gold miners. We had extended here and I was expecting a retrace down to this level. And by the way, we got it. So now look at price action and you'll see, let's correspond. Here we go. A gorgeous rollover in XME. Now that's metals and mining. an absolute tag of that almost 57, and then a rollover to what? 52.39, which was exactly my price target. Like literally posted that. All right, so then we also have XLF. This was a warning that this 127.5 fib retracement was going to be tested, and we went through it, forming a very bearish engulfing candle on a weekly, and then this is the follow through all the way down to where we broke out 35.29. All this stuff was posted in on Slack. So XLF I had warned, XME, XLE, TLT higher, USD higher, gold and miners lower, rotation from value into growth with fabulous plays across the board. That's how I work. And I post my thoughts in my live trading room as well as for clients. Case in point, June 10th, which was a little over a week ago, I had said pockets of momentum are proving to be sticky. And I definitely saw a two-sided market. There are longs and shorts for sure. The bullish plays under the market are extremely robust. And the stuff that is traditional reflation was weakening. The industrials, the transports, the financials, as yields fall further. It's a case of buy the expectation of a CPI beat, which we had that week, sell the news of a CPI beat, as well as the China commodity push down. And they had been fabulous trends, and they were at risk of breaking their 10-week, which is a big deal for me. In other words, it's a sign of a trend reversal. So they were phenomenal chases short, while the momentum plays were phenomenal chases long, and that was across Caterpillar, Deere, FDX, UPS, home builders like I showed you, my lumber fade, and then of course XLF and related, banks. All of the plays that had been phenomenal, building material plays and, just again, reopening plays, they were in distribution. So I warned about that. And they continued to be fabulous. And then, you can see not a lack of warning, but also the risk was underneath the surface. There was some sincere risk of the NYSE rolling over. And if I can find that, I will show it to you because I posted it for clients that I was a little bit worried. June 15th, also I update. There it is. There we go. So June 14th, same idea. I said, okay, this is getting a little real. We are absolutely about to test this head and shoulders. Would not be surprised if we come down here. Now, again, this is small caps. And sure enough, and I had to follow up. Here is the bearish scenario. We break below 230. We're going to head down to 226. And then, of course, I follow up. So this isn't, just the only thing that I'm doing. I'm also putting in play the posted short targets, for example, and this was Friday morning, right at the open. Check that NYSE. Wow, we totally fell apart. And then I will update with these price targets. Again, for clients, it's pretty cool. They know what the routine is because I talk about it, and then, of course, I write it up. So what happened? We absolutely broke 230.32, which was the exact level that I gave. And boom, we came all the way back down through my first price target all the way down to the next one. That's very helpful, wouldn't you say? Diamonds, I had already said stay short below 242. And this was also intonating we were going to roll over, and that was confirmation. Boom, right to the next price target, 332.86. Gorgeous, right? Qs, that was pretty bullish. I don't think that's going to be so easy to do next week, but the point is, it had stayed bullish, and with it, lots of momentum calls. But what happened with SPX? What was my price target here? Yep, you got it, 41.70. And we went through it, and we closed on the low. So this is very exciting if you like to make money. And hopefully you can also follow along using my risk indicators, which were fabulous tells of the impending sell-off. So I'm going to go over this real quick. So this is my risk indicators, and some use this as standalone trading signals. I'm going to show you how I use them as indicators to support my thesis of a rollover. So on June 14th at 12 o'clock, this thing triggered short. What happened at June 14th at 12 o'clock? Well, take a look. Price was at 421, okay? It changed. This is the whole point of these indicators. If you don't want to like play the macro to micro, you don't want to get shaken out of all these gyrations. This is it. Smooths it right out for you. Price was 421.79 on SPY. And what is it now? 413.60. Do you think that would have been helpful? You think that was just a one-off? No, it was not a one-off. Here's the cues. We actually had a little break shorter, and then we went bullish, and then only toward the end of the day on the 18th did we actually start to soften again. So this is recording every 30 minutes. It's a fabulous, fabulous tell of what's happening under the surface and smooths it all out. Here's the Russell, and you can also see it's back. It has a timestamp. So when did this move? It went from bullish to bearish on the 10th, and then it reverted back into, and remember, this is going every 30 minutes, so it's only telling you or alerting you when the trigger alerts, blah, blah. Anyway, bearish to bullish, and then lastly on June 14th at 4 o'clock, bullish to bearish, and there it remains. You want to see what it looks like on IWM? Boom. Here was the trigger, 231. Smooths all that noise out and keeps you in the trade. And where are we now? 222. Pretty helpful. Solid $10 dump. All right, that's how this works. I welcome you to join me in my live trading room. I also invite you to check out my risk indicators. This is all under my services, Fishing Club, risk indicators, and recently launched, yay, Discord channel, which is free until July 5th. So this is only going to have my chase and my market thought piped in there. But for those who are interested in checking it out, this is a free few weeks. This is a free 1 week. And we do have a 1 week week passes if you want to see if a trading room is right for you. And with that, happy trading.